This meeting is being recorded.
And share screen. Right, apologies for that. I had plenty of time when I started this morning. I ran out of a little bit of time there. So, good morning. We'll start. I hope you can see my training view screen with gold on the 15-minute chart. Yeah,
It's all good.
Oh, good on
okay. So I've started to prepare for this meeting, and then, like I say, I ended up running a little bit behind. So what I did was I put the 3 lines on the chart, and what I need to do is put the volume profile on. There we go. This is where I got my 3 lines from. So this is yesterday's chart. The top of the value area is the top of that blue section there. I think everybody who's on has done this before, so I don't need to go in great detail unless anybody has got any questions. So we put the first line at the top of the blue, yesterday's value area, which is the extreme of the 70%, and the second line goes at the bottom of that extreme, and the third red line goes on yesterday's point of control. So we've got the 3 lines there. And the first thing I notice is that price is currently outside the field of play. So one thing I do like to put on here is I like to put a bit of a background on this area here, just to make it a bit more visual. And if I put some color on that, you can see you're now focused in on today's field of play. You don't need to do that, but it just helps me to focus in on what I'm looking at. So we zoom in, we'll see that today price actually on a couple of occasions has attempted to come into our field of play, once in the early hours and once at 7:30 this morning. So we need to keep an eye on that. And the next thing I do is I sort of look at the big picture. So I go out to the 1 hour time frame and look at what's been happening over the last few days. And as you can see, price has been on the up almost constantly since the 22nd of February. You can go even further back and see that trend. Well, we need to so that trend has been since, well, certainly since the 28th of January, and maybe even before that, depending on how steep that. But for a long time, we've been in an upward trend, and obviously that's partly to do with the fact that gold is becoming more popular because of the unrest in Ukraine. People are investing money in gold as opposed to dollars. So let's just reset the chart and look at today. Again, looking at the big picture, this purple line is actually the highest high I could find, and it goes way back to I believe it was the 7th of August 2020. So it's sort of 18 months ago. Gold reached a high of 2075.21. Now, if you were on my session yesterday, you would have heard me say, when we were this was at 1 o'clock yesterday, so it was on that candle. I was actually caught saying, there's the highest high, but I doubt very much if it's going to get up there. Famous last words, it almost went up to the high. We were talking about it between 1 o'clock and 2 o'clock, and by the time we got to 2 o'clock, it had started to make its move up towards, it very nearly got up to 2075. I think it reached 2070, so it was about, what's that, 50 pips away. It actually rose yesterday afternoon from that point there to that point there, 632 pips. That was in what, 1 o'clock to 4 o'clock. Yeah, so in a 3-hour period, it rose 600 pips. And then it immediately came back down about 300 pips.
Wild ride.
Yeah. Now, some of us were in that trade. I know, I don't think Wayne's on this morning, but he was on with me yesterday lunchtime, and he posted yesterday afternoon that he'd taken 290 pips out of that move.
Oh, wow. Good on him.
That was more than I tried. I didn't take that many. I took a fair few, but not that many. And I'll just say I also took some of these pips here on this candle because I was up early yesterday and I spotted an opportunity, and I took, I could have taken something like, I think it was about 190 pips that were in that move. Yeah, that candle alone was 240 pips. That was a 1 hour candle, 240 pips. I didn't take all of those. I think I took about 30 because I set my take profit and walked away and left it. And I hit my take profit, and then when I came back, I realized I could have stayed in much longer. So we might look at those. If today's chart doesn't move much whilst we're on, and we have time, I might look back at yesterday and just show some examples of trading opportunities. Because today's looking, well, because of the time of day, I guess it's a bit early. London hasn't opened yet, so we're in this consolidation. So let's just have a think about how I would approach trading today. I looked at this earlier on, and what can we see? We can see that prices moving up and down within that channel. So what I would normally do is I would put a parallel channel on there. If I can find, I can never remember where the parallel channel is. There we go, it's on there. I'll move that out of the way. And if I put my parallel channel at the top of that wick there, and I've got it extended, I just need to draw it horizontally. So that's the top of the parallel channel. And if I take it down to the bottom of that wick there, that's the whole of the, the price has been moving within that channel all day so far. And as you know, what I'll do is I'll put an alert on that channel to let me know when price exits the channel. There's a bit of an anomaly on that setting, because what it will do is it will also tell me when it's entering that channel for some strange reason. I'll put that on once per bar, and I'll get an alert. Oh, alert saving failed, try again. Exiting channel once per bar. So now it's not allowing me to put it on once per bar close. I know what it might be. I might have used up all of my alerts. So just bear with me a second. No, I haven't, but I'll get rid of one or two. Right, we'll try again. Alert. Yes, the entering, exiting channel once per bar. Create. Now, for some strange reason, I just don't know why it's not allowing me to set that alert, but I'll worry about that later.
I've got the same problem,
Have you?
Richard. Yeah.
Oh, well,
Yep.
it's not just me.
Same
then.
here. Yeah.
All right, okay. So for the time being, we'll just have to keep an eye on it. I don't think it's going to move a great deal, but setting that alert means that I can go away, have some breakfast and not worry too much. But sticking with my thoughts for today, I'm pretty confident that price will continue to go up, although I heard a couple of comments. I watched Barley last night and I was watching Anastasia yesterday afternoon, and both of them said that once it does reach this all-time high, there's a chance it might retrace temporarily. The price of gold is going to increase without a doubt, but they think that this might cause some resistance in the market. So we need to be careful. It might reverse on us. So that's as much as we can do looking at today's price until I would guess until New York opens at 1 o'clock, 1:30. So let's have a look back at yesterday, because it was, apart from the fact there was quite a lot of pips, it was an interesting day from a sort of a theoretical point of view. I learned a couple of things watching yesterday's chart. So what I need to do is apply the previous day's field of play to make this work. So I'll put that in and just hope I don't get confused. So the field of play was from the top of the blue there, down to the bottom of the blue there, and that was the, so we need to try not to get confused. This was yesterday's field of play. It was quite, I mean, first thing I noticed is compared to today's field of play, it's quite narrow. Perhaps I should change the style of these lines just to make it a bit more. So if I'll make them thicker, but I'll make them dashed or dotted. There we go. So that's yesterday's point of control. We'll do the same with this one. We'll make it a bit thicker, but we'll make it dotted. Right. So it's now not as confusing as it was. Right. So the dotted lines are Monday's point of control. So we're going to look at Tuesday's chart using Monday's point of control. And so yeah, we're looking at quite a narrow field of play here. It's from there to there, which is, just to put it into context, the number of pips available within the field of play was 180, 197, 179.7. Call it 180. Not to be sniffed at, but compare that with today's, where are we? Or should I say with yesterday's, we're looking at from there down to there, 587. So there's a marked difference between our field of play that we were using yesterday and the field of play that we're going to be using today. Second thing I notice when I look at this is price did what it normally does every day. Up until this point, 545, it was just hovering around that price there. It made a bit of a sharp move down and then it sort of settled down and stayed where it was. I got up quite early yesterday and I was looking at price round about this point here, 6:15, and I saw an opportunity to get in. So let's have a look at what I saw. First of all, putting the Ninja Matrix on, I noticed that if I put a line on, this is when I actually started looking at the chart yesterday. That black vertical line is when I was looking at the chart. So first thing I noticed is we had a Ninja Matrix up. So we were looking at potential buys. And if I then put the Ninjacator on and add the Heikin Ashi candles, what I noticed was we'd had a Ninja up just prior to the Ninja Matrix up, and when I started looking at it at 6:15, the third thing I noticed was that the 13 MA had turned green and the 5 MA, the yellow line, was above it, but also it was widening. So I thought there's an opportunity for a buy here. So I got into that buy and I took a few pips. I can't remember exactly. I think it was about 30 pips, but roughly in terms of pips available, there were 240. So I was kicking myself at that point. Well, I know what I did. I set my, where are we? I set my take profit, I think, at Tuesday's point of control. Slightly unorthodox, but I think I've mentioned before that the current day's point of control is also significant resistance normally. So, I normally say be careful at that point. So I think I got out at that point. And when I came back to the trade, I realized I could have stayed in much longer. And if I'd been sitting watching the trade, I could have got out at this point when the Ninja down appeared. Now that's sort of in contradiction to what Jeff teaches, because Jeff teaches trust the matrix. But here's an example of why I don't entirely stick with that. If I'd stayed in until the matrix changed, I would have lost. I could potentially have lost quite a few pips. So I would have been happier getting out there. In reality, I got out there. But anyway, I still made 30 pips, which gave me my day's target anyway. So no point in crying over that. But it was a lesson to be learned, because if I'd stayed in, it wouldn't have taken long. It would have taken maybe half an hour or so to realize it was going up there. But anyway, so that was my first trade yesterday. And so just following the 3-line strategy that I teach, that was a classic example of Ninja up, Ninja Matrix up, MAs, as I like to see them, with a widening gap, and therefore that was an ideal 3-line trade. Now, my next trade that I got in, because the Ninja Matrix was still green, I wouldn't have got in this down. I had a Ninjacator down, but I'm still with a green background. So I would, just following my own rules, I wouldn't get into that trade. I would stay out. The next time I would look at a trade would be possibly here, where there's a Ninja Matrix down. But you've got green candles. So you've got a Ninja down, you've got a Ninja Matrix down, but you've got green candles. The the red 13 MA is saying sell, the Ninjacator is saying sell, the Ninja Matrix is saying sell, but what will stop me getting in is these are green candles. So I wouldn't have got in at that point, sticking to my rules. The next opportunity would come into this where the green Ninja Matrix up occurred here, followed by a Ninjacator up and a separation of the 5 MA from the 13 MA. So we're looking at a potential buy. I could have been tempted to get in there. I don't think I was actually on the charts at that point. No, 12, I was getting ready to do my 1 o'clock session. So I didn't get in. And just looking at what actually happened, in a way, it turned out a good idea for me to not get in because price retraced. However, it would still have been a valid trade because if I got in at that point and stayed in, I would have been into that big price move. There would have been some drawdown at that point, but it's still a valid buy. Following my rules, that would have been a good point to get in. I would have had to withstand some drawdown. Let's just measure that. If I got in at the bottom of that candle, there would have been drawdown of 57 pips. So maybe I would have been taken out. I would certainly have been taken out. My stop loss wouldn't have been as high as that. Then I came onto my session and started looking at this. And I believe what I said was, if I take off the Heikin Ashi candles, I can demonstrate this. All right, so take off the Heikin Ashis, and if you've got a paid for version of TradingView, you can use this handy tool. And if I look at 1 o'clock, so what that does is it removes anything after 1 o'clock. So we're looking at 12. I've actually put that in the wrong place. I'll just move it on. You can replay. This is useful for back testing because you can see what happens 1 candle at a time. So we're now on the that's a 2 o'clock candle. So I would have been looking at it at this point on the 15-minute chart, and I seem to remember saying, look, we're looking at what's happening sort of in this period from that trade to potential trade at this point. We're in a little bit of consolidation. I think what I actually did was I think I put my parallel channels on the top of that wick and certainly down to the bottom there. I put a parallel channel on, and I suggested to people on my session yesterday that we should wait until price broke out of that channel one way or another. I did say that I suspected price was going to break out to the top, and I said, be careful if it breaks out because it might just be a bit of a fake out. They might be taking price up to take out stop losses and then intend to bring the price down. So nobody knew whether price was going to go up or down, but I did suspect it might go up. So let's just move forward. So that was sort of the end of my session. I finished about 2 o'clock-ish. And left people with that theory that if it broke out, don't jump in straight away because it might be a fake out. Wait until a candle closes outside that area and then think about getting in. So if I move price on, so that was the big move. That was where Wayne got his 290 pips in that move there. And then price returned. So that was his second trading opportunity. And I got in. I didn't take all of those pips, but I was in a position where I'd taken sort of 2 days pip target, because I'd taken my day's target there, and I doubled my day's target here. So I was quite happy. I was a little bit kicking myself because I could have taken more pips, but there you go. And I didn't trade after that, but let me just run it through and explain why I didn't trade after that. So when it reached that high, it almost touched the higher high, the highest ever high, 2075. I don't know. I mean, there was some news at 3 o'clock. That news there could have affected price. There was news at 1:30, 1:45. So there was a little bit of news. I don't think it was red flag news, but something happened to increase that price. I mean, it was, as say, it's over 500 pips in that period there. 1, 2, 3, 4, 5. So it was about an hour and a quarter, and it went up by 500 pips, but it immediately went back down again. And it went back about at least half of that. And then it went back up, and then it went back down again. Now I'm wanting to explain why I didn't get into this trade. The PSAR split, we had a red candle, and the 13 MA had changed to red, but nothing else had gone in my favor. We were still on a green Ninja Matrix, so that was suggesting further buys. And if we put the Heiken Ashes on, that's telling me you can't use bar replay when you're using Heiken Ashes, so we'll get rid of that. And what's happened? So we were looking at this point here. So we had a Ninja down, but we didn't have a Ninja Matrix down. That was what stopped me getting into this sell. Now, I guess you could say that was a fault with my system, because there were a lot of pips to be had. There was a Ninja down, there was a red 13 MA, the yellow did eventually cross over it, so there's another sign of a sell. But I would have stayed out at that point, purely because the one factor that was against me was the Ninja Matrix. We could have taken a lot of pips out of that, but I would have been breaking my rules. And one of the things that I've learned in trading Forex and trading metals and indices is stick by your rules. And in that case, I missed out on quite a lot of pips, but I was happy that I'd been disciplined and stayed with the rules. And now, so if we move on to this Ninja up, this was 8:15 last night. There was another opportunity. I didn't take it. I wasn't even looking at the charts at that point. But when I look at it this morning, I see that there were pips to be had there. Very rough calculation, 140 pips, sort of between 8:30 and close of market. And all of my criteria were satisfied. We had a Ninja up, we had a Ninja Matrix up with steel green. We had 13 MA, which was green, and the 5 MA was above the 13. So all of my criteria were satisfied. So I could potentially have got another 140 pips there. So that was just a quick look at yesterday. And are there any questions, any comments, suggestions?
Got one comment, Richard.
Yeah,
Do you want to try and put your alert on now? I was successful in just putting the parallel channel alert on.
I'll give it a go. Yes,
Boom.
thank you very
Good
much.
start.
So TradingView must have caught up with us. Okay. So just looking at the current situation, it's looking like it wants to come out of the bottom, but it has been there already and rejected it. So we just need to keep an eye on that. Would you like me to introduce something a bit different from Anastasia's teachings?
Yes,
At
please.
the risk of confusing you. But
Bring it on. Bring it on.
Yeah, I mean, I'm conscious that we keep saying to people, stick to one strategy until you master it. But I've been back into Anastasia's go lives, and I learned something the other day which I used to great effect yesterday, and I just thought it might be interesting. So I'm not suggesting that everybody starts to put this into practice, because I've only tried it for one day. It worked yesterday, but that doesn't mean to say it's going to work forever. So what I'll do is I'll go back to the basic chart, and I'll show you what Anastasia taught the other day. Actually, no, it was in one of her favorite sessions. So she's been teaching it a while. So this was yesterday morning. No, it wasn't. Yes, it was. This was the 8th of March. This was yesterday morning. So this is when I looked at the chart at sort of 6 o'clock-ish. Yeah, I was looking at the charts at sort of 6:15. I thought, well, I'm going to try what Anastasia. So actually, we've just had an alert. It's just popped out at the bottom of the channel, but then gone immediately back up again. So that's sort of an early alert. So will I get rid of that? No, I'll just go through what Anastasia talked about on a previous video. And again, apologies in advance, because I'm throwing in something new into the mix here, but it did work for me yesterday. So Anastasia uses volume profile in 3 different ways. One is on the session volume, so she would put it on the first candle of the day to the last candle of the day, which is the way that we use it. We use so she would use it that way, and she would have the point of control here, and we're all familiar with that. But she does use it in other ways, and one of the ways she uses it is on an impulse move. And let me just get this right. She would say this is what she would describe as an impulse move. It's a big move in one direction, and I think we've already measured those pips. So let's just get it into context. There's 330 pips in that move, roughly. So it would class as an impulse move. And Anastasia uses volume profile on impulse moves. So she would say, okay, well, the move started there and it ended, well, it went up to about there. And so she's got a new point of control. And if you watch the last week's session, Anastasia works on taking trades away from the point of control. So she will be looking to get into a buy, certainly on that candle there, because there's a gap. There's a substantial gap between the point of control and the bottom of that candle. She might have got in at that one because there is still a gap, but she would either have got in on that candle or that candle for a buy. And so she would have taken some of those pips. I mean, I took some of those pips. She would have taken more, I guess, on that. I'm thinking she might have got out at the top of that V70, the 70 area. But anyway, she would have, using her strategy, she would have got pips out of that. But then she has a sort of a secondary thing, and it's using Fibonacci. And I won't go into too much detail.
A quick question there.
Yeah.
How she sets that set up there? How does she know where to put that before the trade has been taken?
Yes, good point. I'm actually jumping ahead of myself here, because I'm trying to. I'll tell you what, I'll go on to the next bit, and then you tell me if you understand the answer to your question. I've actually jumped ahead of myself. I'll go back one step, and I'll see if I can answer your question. Right. So what I need to do is get rid of that, maybe. Okay. So we're looking at. Ordinary candles, and let's place this where we're. So she's probably right. So we're now looking at what Anastasia would see at 4:15 in the morning. And where are we now? We need the volume. We need to put some volume on. We're looking at, if you, the previous day's volume profile would have been there, which is the red dotted line, and the current day, that was yesterday, would have been slightly below it. Let me just, I'm actually confusing myself. I do know the answer, it's just how to explain it. Let me do what I suggested in the first place and tell you what I was going to tell you, and then you can come back to it. So we need to get rid of that. Okay, so that's today, this is yesterday, and I was talking about, yes. So you see this dotted line here, that this was the previous day's point of control. So we're looking at a candle that's gone away from the point of control, and there's a gap. So that's part of Anastasia's. She would have taken that trade without putting. Yeah, I jumped one step ahead of myself. I put a volume profile on that impulse move before the impulse move would happen. So forget about that. We're looking at this point here, where prices. This was the previous point of control, and prices moving away from it. A candle had closed above it, so she would get into that for a buy. So now we need to decide what Anastasia would do using this additional strategy once that trade had ceased. So at that point there, she would certainly have been out because price had stopped increasing, it had leveled off. So that's where I want it to be previously. So if we put the bar replay on there, right. So to answer your question, Tony, this was Tuesday. So this was Monday. This was Monday's point of control. So Anastasia was looking at this and she saw that that candle had closed above the point of control with a fair gap between. So she would have got in at that point and she would have stayed in. I mean, the furthest she would have gone would have been up to the top of that candle there. She might have got out slightly before. But then she'd be asking herself, well, where's price going to go now? Because price starts to level off. It starts to get into consolidation. It's not getting any higher than that wick there. So at this point, she's thinking, what do we do now? And so she would then, I can't do this, or can I do this? I don't know. Yes, okay. She would put a volume profile on from the bottom of this move. So let's say the bottom of that candle there, that was the start of the impulse move, and that was the end of the impulse move. So she's now looking at a new volume profile, and she's looking at this situation where my eye is drawn to this volume profile, and I'm guessing that Anastasia's would be too. So here's, you can see the blue, which is the 70%, but outside of the blue, you've got some minor volume here, but here there's a big gap. There's absolutely no volume whatsoever, and similarly there and similarly there, and yet price has increased rapidly. So by coincidence, from the top of this wick here to the bottom of that wick there was very little volume. So that is what Paul would call imbalance. And similar from the bottom of that wick to the top of that wick, there's imbalance, and similarly up, well, no, that was already been taken out. So there's a lot of imbalance. So if I'm following Anastasia correctly, she would then say, okay, so perhaps price has got to come back down to fill this imbalance. That might happen today, it might happen next week, we don't know. It might happen next year. But let's have a second, let's have another confirmation. Because trading is all about probabilities, and the more confirmations you've got, the better. So if she puts a fib retracement on this, it's quite important where she puts the bottom. So it's got to be at the bottom of that wick. We'll put it there, and it's got to be at the top of that wick there. And you've now got another potential confirmation. I'll just get rid of that red line because that's confusing us. So we've now got a fib retracement on that same volume profile area, the same candles, it's the same from left to right and the same from right to left as the volume profile. And Anastasia's theory is that price will probably retrace at least down to the 50% mark and possibly even down to the 71% mark, and then start its journey back up again. And So I was watching this. I drew this on. I was trying to follow what Anastasia was teaching, and I just watched, excuse me, with interest. So first of all, it went down and went through the 50% mark. Then this one went almost down to the 61%. And then it started to go back up, but it retraced. It had another go, 50%. So if we can just stop that there. So she was right in, well, the theory is right in that this area of sort of nil volume on the profile had to be had to be filled, and sure enough, this candle came down and filled it, taking it down to the 61, roughly 61, and then it danced around a bit, and let's see what happened next. It started to go back up, and sure enough, it went back up to the 100, and then it went up and up and up, up and up, up. So I know I'm potentially confusing people, and I need to do a bit more back testing on this, but it does seem to be a potential additional tool that we can use.
Yeah, that makes sense to me. Now I can understand it.
Okay, I'm sorry I got myself a little bit confused, and I'm worried that if I'm confused, I'm worried that you're going to be confused. So I will need to go through that a few times before it actually gels. But all I'm trying to do is sort of expand the 3 lines strategy. If I can just go back to the 3 lines for a second, let me reset the chart. Yeah, we need to move this forward. So we'll let that move forward. I'll increase the speed. By the way, this is a great tool for backtesting the bar replay. You can go back in time, and you can start 3 weeks ago, 3 months ago, whatever, and you can actually reconstruct, is that the right word? Do a reconstruction by candle of what actually happened, so you can test out your theories. So if I wanted to test this Fibonacci theory that Anastasia's introduced, I can go back in time and test it trade by trade. But let me just go back to, we've actually come out of this channel, so we need to concentrate on what's happening here. Let's, I will go back to what I was talking about, but right, so we put the Ninja Matrix on. We need to straighten this up a bit, don't we? Things are moving. Okay, so ignore the fact that my parallel line isn't actually on the horizontal, it's slightly off, but never mind. It's still doing what I need it to do to prove a point. So if we look at the Ninja Matrix, we've got a Ninja Matrix down indicating a sell. We've got an indicator. If we put the, I need to get rid of that one first. Heikin-Ashi candles on. Right, so we've got a Ninja Matrix down, and the previous candle there was an indicator down, and we've got the yellow 5 MA below the red 13 MA. So I would suggest we're in a good position to take a sell. If you want to be cautious, you could wait until this candle closes. Make sure it closes on the outside the channel. That will give you an extra confirmation. What I might do is look at the 5 minute and just confirm there we've still got the Ninja Matrix, we've still got the indicator, we've still got the yellow below the red. So 5 minute is looking good. And why don't we look at the 1 minute? Right, okay, so there's a word of caution. We've reverted from Ninja Matrix down to Ninja Matrix up. That wouldn't necessarily prevent me from taking a trade, because the 1 minute chart is extremely volatile and can change in the blink of an eye. And although we've got the green matrix indicating a potential buy, everything else is staying very strongly a sell. So the PSARs are above. We've got a green candle, but as I say, 1 minute is not the best indicator. It's just a guide. We've actually closed a 5 minute candle outside of my parallel channel. 15 minute. Actually, I need to revert back to normal candles, get an accurate picture. 5 minute. Yeah, 5 minute. We've closed outside. So I'm getting interested in taking a trade here. What I've got to think about, because we've got this candle still got 5 minutes to go. So what I would think about before jumping in is targets. We need to think about where price is going to go. So we'll think about stop loss first. My standby stop loss is above the PSAR. That's always the safest. However, I might be a little bit deterred because that's quite a way off. That's quite a number of pips away from price. It's nearly 200 pips away from. Is that right? Is that?
Yeah.
Yeah. So there's a huge distance between my standby stop loss and this is why when you're trading gold, it's so volatile and can move a lot of pips at a time. This is why people get scared off it. That's a huge stop loss. Let's think about another stop loss. Where else could we place it?
Just below the last low.
That's right. Yeah, just below the last low. So that's there. 2030. That's an alternative. That's a much more attractive stop loss. And you've got to do it in the context of, we'll get rid of that. We've got to do it in the context of risk to reward. So we need to decide where is price likely to go. And is this? Yes, this is yesterday's. We just put the volume profile back on. Yeah, this is yesterday's volume profile here. So the black line there is the field of play. So we've entered the field of play. This is the point of control, which is a potential target. So we've got too many lines on, but we'll leave those on because if you think about this is our field of play, our field of play for today is yeah, that's our field of play. So this is our point of control. So there's our potential target. But just thinking about the basic 3-line strategy, you use 3 lines, top of the 70%, bottom of the 70%, and the point of control, all from yesterday's trading. So that's the situation we're in now. We've entered our field of play. We've got a strong push downwards. And our first target, well, no, that is a target, but let's look at the volume profile. We're currently at, you see that peak in volume? There's a lot of trades being placed at that area there. So that's roughly where we are now. And then after that, it reduces, you go down to almost 0. So there's a potential for price to slam down from that area there down to that area there. It could move rapidly from that point down to that point. So one potential target would be where my cursor is now. And then a second potential target would be the POC. And a third potential would be down where it peaks down here. But so that's giving us a fair amount. We were worried about the huge number of pips in a potential stop loss there, but we've got sort of equidistant. If we start there and we go down to where price is now, it's 240, down to there, it's 440. So risk reward is less than 1-to-1, but it's still pretty reasonable. So I would be tempted to get in on that trade. I'm just looking at other confirmations. The AO MACD is below. I've got the 0 line on the AO MACD as sort of a visual. It's actually below, so it's indicating a sell. The last dot was a red dot indicating a sell. The only possible fly in the ointment is the multi-time frame stochastic, which is showing the 15-minute is oversold and the 30-minute is almost getting in the same direction. That's the only thing that's going against us, except we've now got a green candle here. So maybe a bit of caution. It's still looking good for a sell, but there's a bit of resistance there. Maybe, if we look backwards, we look left, look where we are. There's this area here where price came down and rejected another one there. So there's a bit of resistance at this point. Let's look even further back. No, price has been increasing, so there'll be nothing further back there. But that's just a minor, I think that's just a temporary pullback there. It's just this area of resistance that we're looking at here. But I think otherwise we could be in for a buy. Could be in for a sell. All of my check boxes have been ticked. We've got Ninja Matrix down. We had an indicator down. We've got red 13 MA pointing downwards. We've got the 5 MA below it pointing downwards. Let's see what's happening with the 20 MA, which is the orange. It's more or less running side by side with the red one. So I wouldn't get in right now because price is going upwards, but I would certainly keep an eye on it. That's the 5-minute chart. It's possibly having a temporary pullback. But I'm still biased towards a sell in those circumstances. Right, okay, so apologies for confusing everybody. But what I was trying to do, just to sum up, was if you let me just get rid of that for now. Like, I get rid of my parallel channel just for now. I will put it back on again, but let's. The point I was trying to make yesterday, it doesn't apply as much today, but yesterday, because price was almost the entire day was outside our field of play. I was trying to explain that if you follow Anastasia's strategies, there are further trading opportunities. If we just looked at just roughly that was Monday's volume profile, so it became Tuesday's field of play. So it went from the black dotted line to black dotted line. It was, and price was almost after that point, 6:30, it was entirely outside of our field of play. So our three-line strategy could not have applied. So what I'm doing is I'm looking for alternative trades. And the first lot of trades I'm suggesting is trades away from the POC, which is Anastasia's first lesson. She teaches that there are potential trades away from the point of control. And then the second one, as I say, she introduced this Fibonacci. So that's why I've sort of strayed away from the three lines, because it gives you trading opportunities when price is outside the field of play. Okay, so I'm a few minutes over time, and are there any final questions?
That was great.
Richard, thanks very much.
I'm going to pursue this Fibonacci. I'm going to back test it a few times and see if it works again. And if it does, I'll continue to introduce it to the sessions. In the meantime, I'm going to stick to the volume profile on my trades anyway, and I shall report back. So thanks for jumping on, and I'll do a 5-minute session tomorrow, likely. Okay.
Right. Much appreciated, Richard. Speak to you later.
You're welcome. Cheers now.
Thanks, Richard.
Cheers up.
Thanks, mate. Great ship.